Aloha, big wave trading family. It was another excellent, excellent session for the overall stock market on Monday, with stock indexes once again going out at the highs. I tell you what, that's extremely impressive, and there's absolutely nothing I can find wrong with it. However, I do not live in euphoric worlds. I am very aware that we are extremely overbought. I am very aware that sentiment is extremely bullish. So I will always, from here on out, if we just continue to melt on up, I'll be nervous about a pullback. Doesn't mean I'm going to start shorting the market, but I'm on the lookout for a potential top. And before I go into the one and only new long position, I want to make it clear, despite today's strength overall in the market, breadth was better on Wednesday and Friday in the overall market than what it was today on Monday. So that's a little bit of negative divergence and something I'm paying attention to. And then I want to show you all something that's starting to pique my interest. Right here you can see the S&P 500 dividend yield to the U.S. Treasury 2-year yield. You can see that back here in 2008 it was crisscrossed. It crisscrossed in 2007 before the 2008 bear market. And the S&P 500 has been paying a higher dividend this entire time. But as you can see in 2008, it has crossed, continues to cross, and this is red flag number one to me. Whenever you can buy bonds and get more of a dividend yield from bonds than stocks, big institutional investors are going to start to allocate capital into bonds to get that higher yield than the dividend S&P 500. When will they start doing that? I don't know. I always like to see this chart confirm with the yield curve. If you look at the yield curve, it's fine. The 2-year to the 10-year might be flattening overall. You can see here by the shaded past line. I can't remember how long the trail length is, but you can see here that this has had a wider move than here, which means it's flattening out. However, markets don't top normally until after the yield curve has inverted, as hence you'll see here. See when it inverts here in 2000, then we fall off the cliff, and in 2007 you can see that we inverted much early before, or way early, excuse me. I'm not very good at speaking. Before we fell off a cliff. So right now we have a positive yield curve, but one big red flag that I've always watched before to look for possible future market tops is giving us a signal that buying bonds can give a bigger yield than buying S&P 500 stocks right now. So we'll just keep that in mind as we move forward here. So with all that being said, I will go through my CanSlim scans, Perfect Speculator scans, and basically everything is extended. There's basically only one stock that wasn't too extended that I want to get long, but if we look at LIVN short term, you can see that it's not only extended from the 20 and the 10-day moving averages, but it's also extended from the 5-day moving average. So this is a pretty extended stock overall, but it is not extended from its key 50-day moving average. So that's really strong support right there, despite the previous 4 days up session. So with LIVN, because it's extended from all those moving averages, it has to be half. It's a semi-CanSlim quality stock, 1%. Was confirmed in my price volume BOP scan, another 1%. That must be halved from 2% to 1%. So I'm allocating 1% of my account capital. Limit order, good to cancel by limit order, 84.76. For right now, my first stop level is 79.81. That should probably be your only stop level if you're learning to contain losses, if you're looking to only buy stocks and have them work immediately, or get out and then put the capital to work in another stock to move higher immediately. But that's going to be my first stop level, and my final stop level is going to be right here, 76.13. Now, this stock does not move higher immediately and or starts to reverse. If it loses that green BOP to yellow, this becomes my only stop. If it pulls back on above average volume and loses green BOP, this is my only stop, and then whatever that day is will have half of my stop. If it keeps green BOP, pulls back on low volume, both stops remain true. Any abnormal price action deviation from these 4 bars in the next few days from LIVN, you can be 100% sure, like always, the second stop will never come into play. So with LIVN, our only long position out of the way, and I flagged others. Check the new positions page. You'll see that I flagged others. Let's get straight to the sell signals. And by doing that, let's go to my watch list tracking list so we can see whenever we entered. PETS, clear cut. On social media this weekend, I posted PETS, and I made it clear that the low a day on Friday got one of my stops. I had 10 total stops going back to here, 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 and here for 10 total stops. Earnings were on Monday. I knew it. Gapped up higher. I knew that if it gapped up, it would create the perfect sell the event scenario. Didn't think it would be this bad, but it is that bad. PETS is closing below its 20-day moving average on above average volume. That is a 50% sell signal. Whatever I am still long, 50% of it gets moved up to today's low a day, and then the rest of the 50% of my shares that are left get split to where all of my current stops are. Now I think I'm going to be eliminating this one. Yep, see how the 200-day moving average is now above that low? So that stop loss will get removed immediately, and this will be my final stop loss level, 40.82, and it will actually be for profits, as you can see we entered here. But PETS, that's a 50% sell signal. IIVI, same similar situation, closing below the 20-day moving average, above average volume. Red BOP, that is definitely a 50% sell signal for a 37% gain. Whatever I have left, half goes here, then here with my stops. So 1, 2, we'll have the final half, and then half goes right there for IIVI. HRS, this is a 50% sell signal with it closing below the 20-day moving average on above average volume. HRS has lost both its green BOP catalyst and closing below the 20-day moving average on heavy volume. So I don't think I'm going to mess around. I think I might not. I don't know. We'll find out. I won't know till the morning. You'll have to ask me. Either 50% of my stops are going to go here, and the final 50% will just be right here, or they all go right here. Now, since BOP didn't turn completely negative, it's probably just going to be 50-50, but you could do 100 here. It's completely up to you. KMG is closing below this low right here, 62.02, closing at 61.69. So that is another 59% sell signal. So whatever I have left in KMG goes up to today's low a day. And then my final stop for now, I'm going to have half here, and my final half for now is right below 58.22. This way I can leave the entire position with gains. So those are the 50% high quality sell signals. 100% sell signals, there's only one stock related sell signal, and sadly the dollar loss amount is well below what my max paying dollar loss amount is. But the dollar loss amount I wanted on this stock, which was just a couple of $100, ended up being a few $100, right around $300. But the max loss on any one position that's a quote quality is $1,000. So I definitely am fine with everything. But it's a little bit of a screw up, a little bit bigger position I probably should have taken, given into account how much alpha is in this stock. But CPRX closing below the 50-day moving average, heavy around the session before, closing below my basically final cut loss level on the signal date level, since it's been rolling over constantly with a strong market. CPRX is 100% sell signal. I am all out, hit my final stop, which I moved up to this day's low a day. If you're still long, 100% right there. And then the rest are clear cut. SDOW hedges failed. Remember, I do the 50%, 50%, 50%, 50% until I have one share left, which means SDOW will have to go down probably at least 10 days in a row to get me completely out before I sell all. But if you're doing end-of-day basis signals, that's a 100% sell signal. MIDZ is a 100% sell signal, and SQQQQ is a 100% sell signal. Okay, everyone, that's it for the longs and sells. LIVN is it. I have one speculative long position I am going to take for tomorrow and one speculative add long position for tomorrow. But basically, everything's extended. The market, stocks, breadth is starting to weaken. I'm having some red flags show up in some macro data like I just showed you. Bullishness is out of control on all the sentiment surveys. So keep all of that in mind if we continue to move higher here. I never chase. I've been fully long for a very long time, so there's no reason to. I'm looking for a pullback. All right, everybody. I'll see you in the chat room on Tuesday. Aloha.